videos, they go hand in hand. If you're just watching these videos all the way through, like I have them organized, just do that because I touch everything from the ground up of what's important. So in this video, we're going to talk about support levels. The next video, we're going to talk about resistance levels, but they go hand in hand. So you're going to use them both together. So what exactly is a support level? Let's go to handy dandy Wikipedia here and says support or a support level refers to the price level that an asset does not fall below for a period of time. An asset support level is created by buyers entering the market whenever the asset dips to a lower price. In technical analysis, the simple support level can be charted by drawing a line along the lowest lows for the time period being considered. A support line can be flat or slanted up or down with the overall price trend. Other technical indicators and charting techniques can be used to identify more advanced versions of support. So support levels, they're very simple. Let's just take it from just like an average person's perspective. A support level it's really just the floor of a price. So you find that point where the floor is being respected. So if we draw a trend line, like you learned in that definition, the trend lines they can be horizontal. We're looking at a 4-hour chart too. So these are, there's a lot of little moves happening if you zoom in here. So there's a bunch of support touches in this area if we zoom in. Or you can stretch a support level across a longer frame of time. Like this, for instance, is from June of 21 to currently right now. We're right here in April 1st. So this is a long support level, but you'll notice that support level, what happens? This is called a bounce. So when the price drops and it touches a known support level, so you have to find these support levels. So you need to go searching for them on the chart. So you're going to want to draw charts and just find your own support level. They can be all over the place. But the more touches you have on a support level, the higher chances you're going to have of it being respected. So the smartest thing you can do, and it's my number one rule when getting into a trade, I always follow this rule, and you should do the same too as well, because this is going to prevent you from losing tons of money, and it'll also prevent you from developing bad habits where you start buying based on your emotion. One thing that makes a successful trader is try to trade like a robot. I know that sounds kind of ridiculous, but these algorithms that these big, hedge funds and these money managers use, there's computer systems that find these support levels. And what they do is they have, an algorithm that automatically will buy when that support level is engaged by the price action. So when the support level comes down and touches, or the price action touches a support level, you're not, there's a ton of people that are buying in here, not just the computers that these algorithms are based around, but also just people who are other traders. The great thing about technical analysis as a whole is people are following these fundamental rules and they're seeing the same things you're seeing because they're looking at these charts. There's 100 guys out there that are looking at this very same exact chart on this same time frame and they're finding these support levels. And because when you find support levels, most people are programmed to set their buy orders on support. Everyone's heard the phrase buy the dip. This is essentially buying the dip. Now the problem is if you don't understand how to read a chart, if you buy a dip, oh, I'm going to buy the dip right here. You bought this dip. Well, guess what? The price kept on dipping. And because it kept dipping, if you bought here and you sold it finally somewhere around here, you just took a 17% loss on that. 16.81. That's crazy. That sucks. So that's why when you buy the dip, the next part of that phrase, buy the dip of a major support level. Let me make that the new coin phrase that we're going to use. Only buy the dip on a major support level. And a major support level, that's relative to whatever time frame you're trading on. If you are a full-time employee at a company and you just want to trade like on the weekends or you want to hold these coins for a long period of time, what you can do is on a Saturday when you wake up and you're having your coffee or whatever you're doing, go to the computer, look up an asset that you're interested in that you've seen on a chart that looks good, and zoom out and find major support levels. So let's look here. I'll help you draw them out. So we got this. Let's just keep referring to this one. Like I said, we can draw support levels, horizontally. They're all over the place. They can be horizontally, they can be slanted. They can even be support levels onto the downside like that. So you can even draw support levels like that. So there's no one right or wrong way. Essentially, you're going to draw them slanted or horizontally are going to be the most common ways you're going to find good support levels. But let's just use this as an example. We'll get rid of the remainder of that. So This is Bitcoin, as always, 4-hour chart, July 2021, February 2022. Let's say the market took off, but you notice that this is a good support level here. You want to buy on a support level, maybe you'll have automatic orders that are set, in specific areas. So maybe you have a buy order set on this point, maybe you have it set here, or, whatever the case might be. And when you have your buy order automatically set, I'm going to show you guys how to do this, but you're going to get an alert on your phone from TradingView that's going to say, hey, your buy order was filled. Even if you placed that order back in September of 2021, once it reaches this point, you're automatically buying into that asset. So that order stays in the system until you remove it. So that's what's great about it is just be patient. Just don't trade on emotion. Don't jump in. Who cares if you missed all of that movement? The nice thing about buying down here is you have a great baseline to make a ton of money. So if you were patient and you waited for that support level bounce and you had the order set because you drew it on your chart, you looked over here to the right side, you saw, okay, so I'm going to set a buy order for 33,825. You type that into the computer on the exchange you're using to buy, crypto or whatever asset, and then you leave that order in there. And if that order is not set to expire, meaning it doesn't stop after a period of time, eventually, if that price touches that point, your order gets filled. And then what ends up happening? You reap the benefits of taking profit. Now notice here, we just zoomed in on the support level. It touched right here. And what happened? When it touched this support level, since it's touched so many times before in the past, especially on the bigger scale by looking at a 4-hour or daily chart, the more macro a chart is, the higher probabilities you have of that being a successful support level. So find those support levels on the big time frames, and then when you start trading, day trading and stuff like that, you can find these smaller support levels to help you get in and out of trades in a shorter period of time. But let's say you bought right there, automatically you got that order filled. Let's see what your profits are in just 1, 2, 3, roughly about 12 hours. Let's take a look. 17% profits. 17% profits within a few hours. Okay, actually like 2.5 days. That's pretty dang good. I'd say if you're trading Bitcoin and you bought in at 34,000 and it goes up to 38,000, $8,000 in a couple days, if you threw all your money into a solid trade like that or a large amount of money, you're reaping those benefits because you're getting a way higher rate of growth on your investment because you waited for that support level bounce. So we'll talk about when to sell in the next video, and that goes along with the resistance levels. But draw out these charts, find a chart on TradingView. It doesn't matter, do any chart. Just go draw out support levels. If you want to send me some of your support level images, if you want to screenshot them, you drawing some of them, I can give you feedback on if I think you need to change stuff. But don't make it complicated. Just find points, draw a line, and draw a line to what makes it look like the price is bouncing off of that line. And those are good support levels. Remember, the more touches you have, the higher success rate you have, and the stronger that support level is, so it's less risky. So we'll talk about resistance in the next one now.